Good day, everyone. This is Gary Ander with Chart Talk from ShrewdTrading.com. Last week, the Fed finally put its cards on the table. And of course, we saw the rally from that point. As a matter of fact, if we look at the cash S&P, we see the move up, the consolidation, and then the move up with the Fed day, and then Friday as well. We had another somewhat bullish day. But we did see some profit taking on Friday. We see the upper shadow of this candle here where prices moved up to that level and then backed off by the close. And what I think that is just a little bit of profit taking. And I actually expect that to continue into this week. The markets are a little bit overbought at this time, and I'm expecting a slight pullback during this week. And this 1440, the breakout level, and if we look at a monthly chart also, we see the swing high that we have right here around that 1440 level has to be respected as a very good support point. And I believe that if the markets come back down to this level, around the 1440 level, the odds are that we see some buying at that level. We also see this 10-period exponential moving average moving up to that 1440 level as well. That also helps solidify that support area. Now, if price action comes back down and blows through the 1440 level to the downside, then we have a little bit of a different story, because then it's going to go back into the old range that we've been in. And although when the market's overbought like this, it can continue to go higher or it can go sideways, I think based on the chart that I'm seeing here, the most likely resolution, at least early this week, is a bit of a pullback. Now, with the Jewish New Year today, we're going to see some light volumes in the market. And potentially on Monday, we're not going to see much of a move at all. Although sometimes when we see the light volume, it actually gives us a little more volatility than we might expect. But that really hasn't happened recently when we've had these light volume days. I actually expect a similar situation in the euro-dollar. We see the euro-dollar broke above this important 3,000 level. It went right up to this red line is the 38% retracement. So if I go to a weekly chart, we see from the decline that we had, here's the 38, the 50, and the 62% retracement, and we see price sitting right at that level right now. Again, back to the daily chart, so that's that same 38% retracement, and I'm looking for a bit of a pullback in this euro-dollar as well. I'm not suggesting at this time that the S&P or the euro-dollar or many of these trends that we have in place are going to change. I'm just looking for a little bit of profit taking and a little bit of downward action based on this overbought level that we're in. And if I'm correct and the market does start pulling back, then we have to watch at what levels we see buying coming into the markets. So we want to watch the price action at 3,000 in the euro-dollar, at 1440 in the cash S&P. And I'm also thinking that now that the Fed has laid their cards on the table, we might see a little bit more natural trading or breathing within the markets rather than many traders just looking for that next big event. But we'll see how that works out. So the key point in the S&P is that 1440 level in the cash and the 3,000 level in the euro-dollar. The key during this run, or any run in the market, is to stay on the right side of the trade and check out our market check feature on ShrewdTrading.com. This is Gary Ander, Shrewd Trading.